The annual wage growth numbers for the December quarter have just been released by the Bureau of Statistics. Let's go live to our business reporter, Edward Boyd. Ed, wages have increased 3.2%.
Wages, Kieran, the annual rate, basically in the calendar year 2024, up 3.2%. That figure was expected by economists. The quarterly rate of wage increases during the December quarter was 0.7%, which was slightly below the market expectation, which was a 0.8% increase for wages. But if you go back a couple of years, during 2022, wage growth basically accelerated above 4% and was high for about six to 9 months. It's now started to come off again and get back towards that 3% figure. During the September quarter, the annual rate of wage growth was 3.5%. So it is slowly moderating. Governor Michelle Bullock was actually asked quite a few times yesterday about the wages figures and how they play in with the cash rate, because obviously when there are high wages, businesses' costs are accelerating and they're paying more in salaries. It also contributes to it's also linked to the unemployment rate as well. But according to the Bureau of Statistics today, the release they've just put out, the quarterly wage growth number at 0.7% is the weakest level of wage growth in Australia since March 2022, and the annual rate of wage growth in the December quarter of 3.2% is the lowest level since September 2022. So in other words, wage growth has really fallen from its highs in 2022 and is now going to be hovering around the 3% level for the next couple of years by the looks of the forecast the Reserve Bank released yesterday, Kieran.
Into the RBA's thinking, do you think? Obviously, it's still... we're a bit over a month away from their next gathering and then the decision on April 1. And we're all wondering, is there the chance of another rate cut, potentially, just days out from an election? How would this feed into their deliberations?
Well, what the Reserve Bank spoke about quite a bit over the past couple of years was the wage price spiral, where inflation increases, so people's cost of living pressures come on board, so living standards fall, so they demand pay rises, so the level of wage growth in Australia goes up. The Reserve Bank basically said yesterday they don't want to see wage growth accelerating anymore. We did have it above 4% in 2022. It's now come in today, as expected, according to the RBA's modelling and economic modelling, of 3.2%. So I think they'll be pleased to see today's wage growth numbers come in as anticipated. They've got wage growth sitting a little bit above 3% for the next couple of years. That was according to their statement of monetary policy they released yesterday. So if the wage growth figures today at an annual rate had come in well above their forecasts of 3.2%, then it would have been a bit of an issue for the Reserve Bank, and they would have definitely kept interest rates on hold for the next few months at least. But because the figures have come in as anticipated, they'll be happy to see these numbers. Obviously, we've got the unemployment tomorrow as well, which plays a key role in their decisions too. But clearly, there are 6 weeks until the next RBA cash rate decision. Yesterday was a big moment for Australia with the first rate cut in more than 4 years. Obviously, a big win for the government as well, which are hoping for some positive press in the lead up to this federal election. And we'll have another cash rate in 6 weeks. If things go the right way, according to the statistics, then there could be a chance we would see rates fall again. But right now, Kieran, the market is pricing in another rate cut this year, but more around June as opposed to April.
Ed, I'll be joined by Sherelle Murphy from EY in just a moment. First, though, before you go, it's a big week of economic data, isn't it? Tomorrow, we've got the jobs number.
Yeah, the jobs number is a critical one that the RBA watches closely. Remember, with the Reserve Bank, they've been on a different interest rate strategy to other central banks around the world. They've got to balance a strong jobs market with inflation. Other central banks really are just focused on the inflation number. But here in Australia, the Reserve Bank did not lift interest rates as aggressively as most of its global peers, with our cash rate peaking at 4.35%, whereas other economies, it was well above 5%. So the numbers tomorrow for unemployment, we get the January unemployment figures, and the expectation is unemployment is going to still be very close to 50-year lows. It's going to be at 4.1%. which we're expecting 20,000 jobs created during January. RBA is going to watch that number closely. They've only got unemployment getting to about 4.2% by the end of this year. So in other words, expect to see the unemployment rate and the jobs market remain tight for the rest of 2025, and we should really see the unemployment rate stay pretty stable over the next 9 months or so. So these are pretty important numbers. It's been a big week of economic news. We obviously had the RBA meeting on Tuesday. We've got the wage growth figures today, and then tomorrow we'll get the critical jobs figures for the month of January from the Bureau of Statistics.
Ed, thank you very much.